Hello fellows, welcome to my channel. This channel is created for educational purposes only, dedicated to people who want to learn how to trade. Either you want to trade stocks, crypto, commodities or forex. You will find high quality educational material. Either you are a beginner, advanced or an intermediate trader. For viewers that want to see more action and how we apply the theory in real trades, you can visit our live channel. Here we are trading our live account and applying the theory, proving that it can be done, while all trading profits go to our subs. However, as a beginner, I do not recommend starting with any real money. Trading is very risky and challenging. However, a risk comes always with a reward. You will find 50 videos to understand the theory, 12 sections. Each section is a playlist consisting of several videos. I do not recommend skipping chapters and trying to take classes from the beginning. We are using verified sources to provide the most accurate information. Remember, this is an educational channel and you will always trade with demos to avoid the risk. Make profits in the market is not the easy passive income you have in mind. The entire material is the same as you will find in most trading courses. The material is totally free and you don't have to pay any guru to learn generic information or waste thousands of dollars. So if you want to support us, subscribe, like and leave a comment for the YouTube algorithm. And you can post your progress in our Facebook page. Thank you very much and trade safe. But what is a time frame? In this episode we will see how to use multiple time frames, how to find the best time frame to better understand the market and eventually better trading decisions. In trading, time frames refer to the duration of intervals at which price data is displayed on a chart. Different time frames provide different perspective on price movements, allowing traders to analyze the market from various angles. We as traders can choose from a wide range of time frames, ranging from the very short term to the very long. There are brokers that offers extremely low time frames, even lower than a second. For new traders, time frames can be confusing. As we change time frames, the market will transform. The up will become down and the opposite. This can be a headache, especially for new traders, but that's why we are here. Trading using multiple time frame analysis can provide a more comprehensive view of the market and increase the accuracy of your trading decisions. As the market is chaotic, new traders struggle to understand what time frame to use. There is a huge variety of time frames, and we are here to provide you with an insight. The smaller the time frame, the more noise you will face from the market. Using a 1-minute time frame might be good for practicing, but not for trading. The reason is you will end up trading for your broker due to spreads that you have to cover. Also, the market becomes more sensitive in lower time frames. Events will have a bigger impact on your trading and the market will look choppier. The higher the time frames, we have the opposite. More stable conditions and higher durations for your trade. Again, not perfect due to overnight fees and so on. We will present an example of trading that is running in profits more than a year, but as beginners is not something you will focus on for the moment. To make it easier for you, we have 3 categories to choose from. For short-term trading, long-term trading, and intraday trading. For intraday trading, we can use minute charts, such as 10 or 15 minutes. In this style of trading, we are trading for the day. We will make another episode on what style of trading suits you best, so don't worry about that. For the intraday trading, we have pros. Lots of trading opportunities as the market is moving rapidly. Cons, transactions cost will be much higher, more spreads to pay. Mentally more difficult due to the need to change bias frequently. Profits are limited as you need to exit by end of the day. For short-term trading, we will use hourly time frames like 4 hours for 6 and hold trades for several hours to a week. Pros: no stress as the market is not ticking by the minute. Fewer commissions due to spreads. You have time to scan, strategize your next move while not having to look constantly at the screen. Cons: overnight fees becomes a factor, you need to calculate them as this will be part of your trading. In carry trading, we will see how you can turn that into an advantage. Fewer opportunities for trades as you will have fewer setups. The third category is the long term. We don't recommend long term for beginners. Long term traders will usually refer to daily and weekly charts. The weekly charts will establish longer term perspective and assist in placing entries in the short term trend. Pros: don't have to watch the market intraday. fewer transactions mean fewer times to pay the spreads, more time to think about each trade and find the next one. Carry trading can be applied. Cons. Large swings, usually 1 or 2 trades a year, so patience is required. In our Bitcoin trading account, we have our trades more than a year and our account is up to 30%. Bigger accounts needed to ride longer term swings. We do not recommend for new traders. As new traders and while you are using a demo, focus on smaller time frames, 15 minutes, 30 minutes, 1 hour and max 4 hours. As you will be in the test phase, you should not wait for an eternity to find out if your strategy works. In simple words, fail fast. Remember, a good strategy will work in all time frames. Yes, you hear it correctly. A good strategy will work in all time frames. Let's see how we can put in order what we said and apply it in practice. Choose the market you feel more familiar with. Open the higher time frame and get the full picture of the market. A simple thing, trend line, is more than enough. Now start to zoom in. We don't want our trade to last for centuries. Choose your primary time frame. Start by selecting the primary time frame you will base your trading decisions. Intraday and short terms is what we suggest for beginners, 4 hours max. This is typically the highest time frame you will use. This time frame will give you the overall trend and market direction. Identify the trend. In all episodes we say the same thing. Analyze the prime time frame and determine the trend. Look for higher highs, higher lows in an uptrend, lower highs and lower lows in a downtrend. This will help you establish the market bias. Select secondary time frames, the ones you will execute your master plan, 15 minutes, 30 minutes and 1 hour. Once you have identified the trend on the primary time frame, choose 1 or 2 shorter time frames to gain more insight into price action and timing. Align the time frames. Ensure that the shorter time frames align with the trend on the primary time frame. If the primary time frame shows an uptrend, you should look for bullish signals or pullbacks on the shorter time frames to enter the market. If the primary trend is bearish, you will seek bearish signals or retracements on the shorter time frames. Analyze price patterns. Examine the price patterns and indicators on the shorter time frames to identify potential entry and exit points. Look for patterns like support and resistance levels, chart patterns. Go back to the relevant episodes or look at chapters to refresh if you are not sure. For example, head and shoulders, double tops, triangle, pennants, channels, and so on. Indicators, use the most popular, some moving averages, MACD, RSI, that confirm the trend identified on the primary time frame. Confirm with higher time frames. Before entering a trade, check the higher time frames to ensure they support your analysis. For example, if you are trading on a 15-minute chart, validate your findings with the hourly or daily chart to ensure there are no conflicting signals. You cannot go long in a market that is close to a double or triple top in the daily chart. Time your entries. Once you have identified the trade setup that aligns across with multiple time frames, wait for a favorable entry point. This could be a pullback, a correction, a retracement, or a reversal pattern that confirms your analysis. Exit the trade based on higher time frames. Determine your exit strategy based on the time frame you trade. If you are trading on a shorter time frame, you might target quick profits and exit when your predefined profit target is reached. Remember, multiple time frame analysis is a tool to help you make more informed trading decisions. It's essential to practice and refine your skills using this approach to find what works best for you. Always pay attention to the bigger picture and zoom in to the lower time frames to execute your trade. But let's see an example of how we can use what we learned so far. I will use the most popular pair, the Euro USD. I will start from the higher time frames. I have opened a different tab for each time frame so you can understand the idea as we will change several time frames. We will use only the technical part to make this example. Remember what we said about how to use all types of analysis. I will first go to the highest time frame. A trade at this time frame will last a millennia, so there is nothing to see here. What we want to see is the major trend. The first useful tool that I will use is Elliott. We have 2 waves, and it seems that the second wave is about to finish. Not much information at this point yet. I will draw my major natural retracements using golden ratio. I will also mark with thick lines the borders of this downtrend channel. Make sure you have checked the option to appear in all time frames. What I see here is a potential short at this level. However, I don't want to wait for a couple of years for the prices to go there, if they go there. But trust me, those thick lines will help you and will stay there. But we have another tool, supports and resistances. The price here respected previous resistances. The market still has plenty of room. Let's mark those areas. Now, as we said, let's zoom in some more. I'm going to the weekly. I'm changing the time frame as still we cannot enter the market. Later on with practice and experience, you might choose some long carry trading trades. But for the moment, this information won't help you. As I zoom in now, I am in the weekly. Still, we have plenty of room for some trades. I have already spotted that the market might move until the top of the major channel. Let's zoom in some more in the daily. I will leave my golden ratio levels. Remember, we need to keep our charts clean. So far, we have a channel, some previous resistances, some golden ratio retracements, and no indicators yet. I will zoom in the 4 hours. I see a potential market move. No major lines are being violated. I have aligned my time frames. Plenty of room for several pips. I'm speculating that there will be a trade, but still nothing is clear. Let's zoom in into the 1 hour. The market is choppy. Let's extend some trend lines. Can you see it? A pennant maybe. Again, this is up to you. Now tell us in the comments what indicator you would use. A breakout above might be our signal to enter the market. Again, I will zoom in the 15 minutes. Here it's our sweet spot. A beautiful trade. Huge risk-reward ratio. I hope you are not getting any ideas as we used only technical analysis for this part. And as an example of how to zoom in time frames, think of it like a sniper that zooms in to enter the market. We need to use sentiment and fundamental analysis before we proceed. Changing time frames can be confusing. Choose some major time frames like 4 hours and daily and 30 to 50 minutes for your trades. Again, the higher the time frame, the longer your trade will last. The longer the trade will last, the less trades you will have to test your strategy. That's it. Thank you for watching. Go back, repeat the chapters you are not sure, and you will find your name in the Arintra supporters. Help us to launch it. You will find more info in the pinned comment. Trade safe. So that's it for now. Thank you for watching our videos. I hope you enjoy. You know that we need your subscriptions, likes and comments for the YouTube algorithm. Help us to make more content and trade safe.